Hi, everyone. So, is regulation in Canada's financial sector a help or a hindrance? Canadian security regulators have cracked down on unregistered crypto exchanges operating in the country. But what impact is it having on the future of crypto in Canada? This discussion explores some of the pros and cons of Canada's approach to regulating crypto exchanges. In conversation with Josh Scott from 𝘝𝘐𝘚𝘐𝘐, please welcome President and CEO at 𝘠𝗲𝘁𝗶𝘀, 𝗔𝘍𝘐𝘚𝘐𝑻, and President and CEO at 𝘝𝑐ryptochicks, Elena Sinelnikova.
A little bright.
Mic 345.
Oh, I'm just hopping right to it? Okay.
Yep. We're good.
All right. Thanks for the introduction here. Excited to be here at Elevate again, on stage as a moderator for the first time, so please cut me some slack. I cover the Canadian tech ecosystem for 𝘝𝘐𝘚𝘐𝘐. While I don't have a specific beat, I've effectively become our crypto reporter. So it's great to be here talking crypto alongside two people who know the industry very well. Our topic is the future of crypto exchanges in Canada, but any conversation I think about crypto exchanges right now that doesn't start with a discussion of the events of the past year and a half would be lacking. In terms of, from the big hacks to the collapse of various platforms like Celsius, Voyager, FTX, to the broader decline in digital asset prices, trading volumes, and associated layoffs. Let's just say it's been a very interesting and challenging period for the crypto industry. Some have described it as a crypto winter. Many retail and institutional investors were hurt badly by these conditions and have pulled back accordingly. But this market at the same time has also helped weed out some of the industry's bad actors and more questionable business models and practices. My two panelists here, this certainly isn't the first crypto downturn that either of you have seen. From your perspective, what are some of the positive and negative impacts of the crypto downturn, and maybe this latest one in particular? Elena, you want to kick us off?
Yes, thank you. This is not our first bear market, so we lived through it, like many cycles of it, and I would say every time it's the same thing. So that's the people get excited, people invest money, people, like some of them, grow their money, and then some of them lose the money, and then there is this kind of a recession for a while, which we call bear market. What is the same in the whole things that, of course, the protection of the investors are not happening. It's happening in a way that they learn a lesson themselves. But then new generation of investors come and they learn the same lesson over and over and over again. What we don't see that much, that actually maybe the government and regulators participating in that process actively. And that's what we want to change that. We want to educate them. We've been through these cycles many times, and that's what we're here for. Hopefully, they hear us from this stage and they come to us because we know the industry, we know that really well, we lived through many cycles of it, and therefore we can give this knowledge. Just talk to us, regulators.
Yeah, I mean, I'd say, in an industry that's quite early in its, life cycle, to see the ups and downs that we've seen, to see bad actors come in and repeatedly try to take advantage of this new industry and take advantage of people's education around the industry is not overly surprising. It's probably, taken a few cycles where we've unfortunately seen some of these examples repeat themselves. 𝘠𝘲𝘁𝘶, now FTX, BlockFi, Celsius as examples. But throughout this, what you see are companies that are committed to operating and growing the industry in the right way. Over time, you look at platforms like FTX that were wildly successful while they existed, and unfortunately, in many respects, was just too good to be true or an absolute fraud. And that really just over the long term opens the doors for platforms like ours that are really focused on building out for the long term, using regulators and regulation as a way to grow the industry, protect the consumers, as mentioned. And so, it is difficult, and it does lead to periods of heightened volatility and uncertainty, as we're living through right now. But long term, I'd say this is part of the growing up process that needs to take place. And while it's painful in the short term, really, the long term, I think, benefits from it quite significantly.
Right. And maybe since, in terms of where we've talked a bit about how we got here. Since these events, we've seen some positive signs of a rebound, as well as some continued challenges. Price of some digital assets has recovered to some degree, but trading volumes more or less remain a bit lower than expected, which I think speaks to the number of folks who were turned off of crypto by some of these major collapses. And VC funding as well for crypto and Web3 companies remains a little low right now. And in terms of the total market cap, it's obviously a fraction of its former self in terms of those big 2021 highs. From your perspectives, where would you say we sit today? Are we still in a crypto winter? Where would you say we sort of sit right now in terms of the cycle?
Yeah, I mean, it certainly feels that way. When you look at volumes and levels of interest and relative sentiment in the market, you mentioned the 2021 highs that we all experienced. The global markets were much different than where they were today. Think about interest rates at near zero as a result of COVID, all of the money printing that went, into effect globally. Fast forward to today, difficult market, generally speaking, in terms of the equity markets and the more traditional markets that often guide where things and to what extent things will sort of move. Interest rates obviously continue to be increased, and so I think you are, sort of experiencing just a way different market than the one we were in previously, and obviously that's going to have an impact on the crypto industry that, in many respects is one of the riskier asset classes that you can invest in. And so we felt that impact. Obviously, retail trading volumes are down. Relative sentiment, I think, in line with general sentiment across traditional financial markets is down as well. But there are certainly signs of those catalysts that are starting to emerge, and whether or not it's Bitcoin ETF in the U.S. or the Bitcoin halving that's upcoming in the new year, we certainly see, I guess, the signs of things starting to begin to turn around.
Does that line up with what you've been seeing, Elena?
Yes, I think we're slowly going to be going into bull market, and it's going to happen inevitably. When it's going to happen, like I see some signs of warming up. It's mostly we take care of the startups. So I'm not affiliated with any exchange, but I'm affiliated with the incubators, and we are incubating projects, and that's when we see that investors start hopping on board again, and that's where the indication of the bull market. So we start seeing that little by little. So it is probably going to be warming up, and once it's warm up, it's going to be again go, 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 because this bear market periods, that's where we can reflect on all the things that we've done, learn from them, build. And bull market, it's only go, go, go and push, so there's no time to think. But this would be a very good opportunity for the regulators to come in and actually sort some things out that we learned from.
Right. That's a good segue to the next thing I wanted to bring up, which is regulation. And so in terms of, I was at the latest Blockchain Futurist conference, and from my conversations there, including with Dean, one of my takeaways was that people are more comfortable talking about the need for crypto regulation, including on stages in the wake of all these events, and how audiences, even in the crypto community, are a lot more receptive to it these days. And for obviously crypto being a traditionally regulation-averse sector, this seems like a big step forward. And in terms of obviously where Canadian crypto exchanges sit today, crypto regulation has played a key role in shaping the landscape. Canada's been a leader on the crypto regulation front. Obviously, as I mentioned before, unregulated crypto exchanges have collapsed in recent years and left a lot of investors high and dry. And in the wake of this, Canada has cracked down on players, unregulated players, operating in the country, with the hope of obviously preventing the next 𝘔𝘐𝘚𝘐𝘐 or FTX from happening here. At the same time, I guess to set this for the audience in international context, Canada has taken a lighter approach than its neighbors to the south. I've heard Canada's strategy described as regulation by engagement versus kind of the regulation by enforcement approach taken by the US, as you've seen by recent SEC activity against Coinbase and Binance. Players like, in terms of Canada itself, players like Coinbase and Kraken have cited the regulatory clarity we have here as a big part of the reason why they're really investing here. And Canada's obviously made an effort to protect crypto investors and prevent fraud, but while at the same time sort of working with players like 𝘔𝘐𝘶𝗏 to support innovation. I guess maybe the best question to start us off is, how would you two sort of describe Canada's approach to regulating crypto exchanges to date? And maybe, do you think that Canada has done enough to protect investors and prevent fraud while also supporting innovation here?
Yeah, there's a lot there. I'll try and answer all of it if I have the time. Yeah, look, I mean, I think in terms of regulation, Canada has been a leader in the industry, like you mentioned. And in terms of engagement, yeah, they've really worked with the industry to understand the nuances and really evaluate the framework that was put in place 2 years ago to continue to iterate and evolve that. You know, I don't think any jurisdiction globally is going to get crypto regulation right the first time. But at the same time, if you try and wait till that moment till you think it's perfectly right, there could be a lot of consumers that, you know, lose money and a lot of risk sort of created in the interim. So I think what Canada's done is actually quite impressive in terms of establishing an initial framework to provide some protection to the industry participants and look to evolve that over time with the industry, like players like 𝘔𝘐𝘐𝘏 as an example. And, you know, I think one good example of that would be, you know, the regulation of crypto trading platforms that was put in place in, call it fall, winter 2021. But, you know, you think about the industry as a whole, crypto trading is one component of that. You know, participants want to stake, they want to buy NFTs, they want to participate in DeFi protocols. And if you only regulate one component, you're still putting these industry participants, you know, in areas of undue risk if they actually go offshore to take advantage of some of these other products and services. And so, you know, 𝘔𝘐𝘏 worked closely with the regulators in Canada to establish, you know, a framework for staking that 𝘔𝘐𝘏, or through its platform BitBuy, received a license for late last year, which is one of the first of its kind in the country. And so you're starting to see the understanding from a regulatory perspective that this industry is greater than just buying and selling digital assets. And I think that component will be, you know, quite important, you know, as we move forward. You know, one area that I'm sure, you know, will come up is, you know, it's one thing to regulate the existing businesses that operate in this industry today, but at the same time, how do we promote innovation? How do we create a framework that allows these NFT platforms, these DeFi protocols to establish and build their products and services in Canada? And I think that component is something that's been underlooked so far.
Mm-hmm.
From my side, before coming here, I talked to 2 exchanges. I talked to NDAX that are on the west of Canada, and I talked to 𝘔𝘐𝘐𝘏 that are here, asking them the same question: how do you see, like, how do you work with regulators? And surprisingly, because I thought it would, you know, it would be otherwise, they do work with regulators very closely, you know, all the time. But what they all mentioned, that they need to do it more, and they're worried about some things, like, for example, central bank digital currencies that are going to be rolled out, and whether they're going to replace the stable coins and how it's going to affect the business. So all these things I need to be kind of like talked through, and all the aspects need to be taken into account from, you know, the business perspective of the exchanges and the government regulations as well. So basically, we all want the same thing. We all want good for the people, because providing service to the people. And just a matter of coming together and having these conversations. over and over and more. But yes, I'm very pleased how Canada approaches these regulations. Certainly, we were scared that Canada somewhat will follow US and how the SEC approaches, like by punishment. We don't see that here, unfortunately. Not yet,
Not
at
yet.
least. Not yet.
Yes.
Not yet. Hopefully, we don't see it, because not only exchanges, there are the businesses, the other businesses that run in Canada that are connected to crypto and blockchain, they are also under fire, because they're all scared. Lack of regulations brings the lack of brings the uncertainty, and therefore the whole risks for the businesses. And first thing businesses will do, if they have such risks, they just go somewhere else and take all this, money and funds and everything, and all the business somewhere else. And we don't want that. We want that in Canada. We want all these businesses.
I think that's a good point. I think because you think about regulation primarily as consumer protection, or that one of the core focuses of implementing regulation. But at the same time, it's really allowed the industry in Canada to stabilize. Back in early 2021, before there was a framework in place, platforms like BitBuy were looking to either go become a publicly traded company or pursue M&A opportunities. At the time, we were effectively unable to do either as a result of not being a regulated platform, which sounds interesting because at the time there were no platforms regulated. And so you can see how that can have an impact on the growth of the industry. On the back of the regulatory framework that's put in place, one of the benefits for 𝗠𝗲𝘁𝗶𝘀 has been the ability to go out and acquire 4 of the 10 regulated crypto trading platforms in the country. Elena mentioned 2 exchanges. There is probably an understanding that there might be too many in Canada that operate, certainly with an ability to sustainably operate for a long period of time. And so having regulation in place, having that stability within the industry has allowed for consolidation, which in our view is largely needed based on the size of the market and the number of participants in it. And so there are, I guess, many advantages or follow-on effects of having a regulated and stable crypto industry in Canada.
Right. And that's maybe a good segue to the next thing I wanted to talk about, which is obviously this Canada's approach has helped shape the competitive landscape here in terms of the crypto exchanges that are operating here, that aren't operating here, the ones that in Dean's case have combined, because 𝗠𝗲𝘁𝘶 is obviously now a combination of BitBuy, 𝘠𝘲𝘁𝘁, 𝘠𝘲𝘁𝘁, and Coinberry. Can you maybe tell me a bit more about, Dean, maybe to kick us off, how Canada's approach has helped sort of shape the competitive landscape here? Because obviously, as we've spoken about previously, the size of the market and then the cost of compliance here has helped fuel some consolidation in the industry, mainly by you guys.
Yeah, I'd say the biggest trend that we've seen recently has been enforcement against platforms that have chosen not to get regulated and take the same path as the ones that we've acquired, but continued to operate in the Canadian market. There are some obvious examples of some of the largest international crypto platforms in the industry, but you go through the process of becoming regulated. You follow all of the guidance and all of the requirements associated with being regulated, and all you can ask for is a fair and level playing field against the competition. And when there are international platforms that are operating, in many ways, completely disregarding regulation, but continuing to operate in the country, that really imbalances the competitive landscape. And so, one of the, I guess, more positive trends that we've seen is the enforcement of this regulation. It's one thing to impose the framework and make these companies sort of comply. It's another to make sure it's fair and balanced. And so, you look at the exodus of, a handful of the largest crypto trading platforms globally in Canada this year as a really important sign. And I'd say that's one thing that they've started to focus on, that the Canadian participants probably would have asked or would have expected more from in the earlier days, and now they're finally getting to it and taking it serious, which is really positive. The other thing I mentioned is the staking license. It's one thing to regulate the crypto trading and not allow these platforms to continue to roll out products and services that their clients are looking for. But having that dialogue, those good relationships, finding the balance between innovation and consumer protection with a product like staking would be another really strong example of things that we think are working well.
Right. And maybe just to, in light of time, In terms of maybe some of the pros and cons of Canada's approach to regulating crypto exchanges, obviously some folks in the space have told me that things like custodial requirements, having client assets meet client liabilities, and prohibiting leverage have really helped protect Canadian crypto investors. At the same time, regulatory compliance has come at a cost to businesses, an increased cost of doing business. And others, for instance, have criticized the geographical differences across Canada and the patchwork of regulations that exists in different areas. What, from your perspectives, maybe, and Elena, I'll start with you, what have been some of the pros and cons of Canada's approach so far?
Again, I don't know, pros can be cons at the same time. Canada's approach is kind of like very gradual, very gradual work with the companies. I think they are starting with exchanges, but the other companies that operate in Canada also need these attentions, because I know that majority of the budget that's spent by the companies here that operate in crypto, it's for the lawyer fees. So they try to lawyer up against, but what do you lawyer up against? Even the lawyers, when we talk to them, they don't know, and they say it changes all the time. So there's no guarantee. So basically, you cannot even operate in this kind of landscape. So these are the biggest, I think, con of the regulations, that they have been not very defined and maybe too gradual. And again, this has come from the miscommunication between the regulators and the companies. Yes, and they probably starting with exchanges, because what I think that they go and talk to exchanges on a regular basis, but there are others that are there, and it's not only the exchanges. I think that's the biggest con. What is the pro is, of course, this is happening, and it's a good thing that we are getting some regulation, that regulators are actually now working towards it, because when back in 2018, for example, nothing like that happened at all. There was no regulations whatsoever, like Wild West, literally.
Yeah, I mean, I'd say, I've sort of gone through some of the pros, market stability, fair, balanced competition. I think in terms of cons, like I mentioned at the beginning, it'd be hard pressed to imagine any regulatory body getting it right the first time, 100%. So, you think about, certain investment limits that are imposed on certain digital assets versus others. This might be a little bit too detailed, but, based on the regulations in place today, Canadians are able to buy an unlimited amount of Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. I'm assuming most of this room hasn't heard of Litecoin or Bitcoin Cash. Those are projects, from 2017, 2018 that probably should not be considered within the Bitcoin and Ethereum conversation, whereas the rest of the assets are typically capped to about a $30,000 a year per investor. Things like that probably need to be looked at, sort of in conjunction with, what are the products and services beyond trading and staking that Canadians are looking for. Because I think, as we've seen with BlockFi and celsius, and unfortunately with FTX, Canadians are going to access these products and services whether or not they're offered through regulated Canadian platforms, and that's where consumer protection and really should be focused on. Where are the trends? What are the trends, and what are the products and services that Canadians are looking for in the digital asset industry, and how do we work with exchanges or other participants to provide those in a regulatory compliant manner that protects Canadians.
Right. And noting that we're running out of time a bit here, but in terms of, I think we've established where we sit today. In terms of predictions for what we might see in the future, what do you two sort of think the future for crypto exchanges, at least in the near term, looks like for those operating in Canada? Elena, you want to maybe kick us off when you're...
Well, I would like to, hope and think that it's going to be at least better and better, and maybe in 5 years we're going to be completely, exchange is going to be completely in line with the regulators, on the same page and agreeing. What we probably missing as well, so there's a lot of the whole big industry called decentralized finance that exists, and this is exchanges that are decentralized, let's say, right? So they are not, and actually they run, sometimes they even run anonymously. How do we regulate those ones? So this is a big question. So, and I hope this question is going to be answered as well.
What's your 1 or 2 sentence take?
Yeah, I'd say likely more consolidation as a result of increased regulatory costs and, what is generally a smaller market already in Canada. But I would look to some of the largest platforms globally and look at the products and services there, things like margin and derivatives. I think those are really the next 2 key products for the Canadian regulators to tackle and find a way to allow exchanges like ours to offer those products to Canadians on a Canadian regulated platform.
Right. Well, thank you both for sharing your perspectives here. Do we walk off now, I think?
Thank you.
Thank you.
Good job.